Hey everybody, Smart Silver Stacker here. Hope you're doing well. Boy, what a wild ride the past 48 hours has been in these markets. Gold is back up to new record all-time highs. It has erased all of the losses of the past week. Silver is now back over $31. And the price action that we have witnessed in the stock market, if you needed proof that these markets have become nothing more than a rigged casino and that fundamentals are almost entirely meaningless, well, you've got your proof now, I think. So let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. Okay, so starting off today with the chart of gold, and you can see gold here closing the day near the highs of the session at a record all-time high. Gold currently at 31.73. The intraday high here was 31.76. That is another record all-time high intraday price for spot gold. And clearly in this environment of tariffs on, tariffs off, will there be tariffs? Are we not going to have tariffs? There's a lot of uncertainty here, and the safe haven of gold is preferable to fiat currencies, to treasuries, and the price of gold is reflecting that. Looking at the chart of silver, you can see it's not quite as good as the chart of gold. Still hasn't quite regained all of the losses that followed the Liberation Day tariff announcement, but it's looking much better than it was a few days ago. It has risen back into this trend channel illustrated by these two blue lines that silver's bull market has been advancing within since the bull market kicked off in early 2024. And so while silver hasn't really regained its losses, it's still looking good here. And I would view this as a favorable entry point for stackers. Yeah, maybe you missed the dip here under 29 bucks last week, but still $31 silver I view as cheap in this environment. And once retail investors wake up to just what a rigged casino these paper markets have become, I believe there will be demand for, yes, perhaps paper silver like what we're looking at right here, but especially the physical silver bullion, the silver eagles, the silver coins, silver rounds, silver bars, 90% junk silver, all of that stuff is going to be in high demand very soon. Right now, it's institutions that are bidding up the price of gold. That's why we haven't seen silver move as much. But once retail finally gets a clue here and stops piling into overvalued paper markets, we are going to see some demand for that physical bullion. At least that's my take. It's not financial advice, just telling you how I view things here. Now, I want to talk about the NASDAQ here and the stock market because the price action over the past week and especially over the past 48 hours has been nothing short of remarkable. And if you didn't realize that this is a rigged casino paper market before, if you don't get that now, then I don't know what it's going to take to wake you up. But just a quick recap of what's been going on, right? We had a big sell-off following that Liberation Day tariff announcement last week. And then this week on Monday, we got this spike up. Now, what was that spike up about? Well, you might remember there was this supposedly bogus report on a tariff pause that briefly lifted the markets. This is from the AP before the White House denied it. So they say here in this article that the origin of this rumor was unclear. It was just on social media, and they say it was a misinterpretation of comments made by Kevin Hassett, the director of the White House National Economic Council, who was asked whether Trump would consider a 90-day tariff pause suggested by a prominent hedge fund manager. And he said, I think the president is going to decide what the president is going to decide. And later that day, the White House initially appeared as confused as everyone else, but after 20 minutes, a government account rejected the report as quote unquote fake news. But obviously, this was not fake news. This was a trial balloon being floated. It's really interesting that a prominent hedge fund manager suggested this, right? I mean, it's almost as if he knew what was coming ahead of time. I'll leave that up to you to interpret, but it seems as though some people may have had some foreknowledge of what was coming on Wednesday. And then on Wednesday, that announcement was made following more blood in the water, more sell-off in the paper markets. the announcement was made, and it led to what was one of the largest stock market rallies in history. I don't know if it was in percentage terms exactly the highest, but the NASDAQ closed up something like 12 to 13%. It was a huge move up. That should tell you something, right? And of course, it was after the announcement, once stocks started to move, that I'm sure the retail investors started to pile in. And it turns out this was basically a bear market rally. If we zoom the chart out a little bit more, you can see we didn't, get back to the previous highs or anything like that. It was just this huge spike up driven by that announcement, largely probably algorithmic trading driving the price up. The headlines come out, tariffs paused, and all of a sudden the algorithms start bidding everything up, and then retail piles in at the top. And then what happened today? Well, we got a nice sharp sell-off. At one point, the NASDAQ was down about 7%, closed off the lows of the day, but still down over 4%. So it appears to me that this was a bear market rally, a bull trap. And look, some of you out there watching, you're going to call me a panikin. I've been called a panikin over the past couple days. I don't know what that really is. I'm just telling you that these paper markets are incredibly overvalued, and they're not being driven by fundamentals anymore. They are being driven by nothing more than headlines, by rumors, and this is a very dangerous situation. And a lot of people, I think, are being set up to be fleeced here. Now, why did Donald Trump make that announcement that he was pausing the tariffs? Was it because he was hoping to give some relief to the stock market? Was it because there was some inside baseball going on? Or maybe it was because bond yields have been steadily rising ever since the tariff announcement. Initially, if we zoom this out of the 1 month chart, you can see that following the Liberation Day announcement, there was actually an initial drop in yields. So remember, when investors are buying treasuries, the yields go down. And then when they're selling treasuries, the yields increase. What we're looking at here is the 10-year yield. But there was this initial drop in yield. So initially, investors were buying into the safe haven of treasuries. But then we saw this reversal and bond yields started to rise. Currently, they are at 4.39%. It's the highest level they've been in months. Perhaps it was fear of rising bond yields and a runaway sell-off in U.S. debt that caused the president to reverse course on the tariffs. Now, I'm not saying it's a bad thing that he paused these reciprocal tariffs, and tariffs are still in effect. As far as I know, those 10% tariffs are still in effect. China is being tariffed heavily. We'll talk about that in a moment. But this may well have been a catalyst for Trump to reverse course on the tariffs because he was afraid of skyrocketing yields and a collapse in the market. And thus far, following that announcement, we did see that rise in the stock market yesterday, but bond yields have really failed to correct. They were slightly down today, but they still remain at the highest level in months. And you got to remember, back in March of 2023, what was causing the failure of banks? It was rising bond yields, because as these bond yields rise, the existing bonds decline in value. That means that a lot of institutions, a lot of banks are sitting on U.S. treasuries. They get these unrealized losses on their portfolios, and you risk a very serious problem as bond yields continue to rise. And this is still something that could come into play here because bond yields have not really come back down. We haven't seen a flight back into bonds. What we've seen instead is a flight into gold, which is, of course, the real safe haven. I mean, if you ask me, whether you're talking about something that has been money for thousands of years or IOUs of a bankrupt empire, $37 trillion in debt denominated in a fiat currency that's more than 5 decades old and it's already lost 98% of its value. Well, I mean, I'll tell you which I'll pick. It's not financial advice, but you let me know what you think in the comments down below. But this is really a very dangerous situation that we are in these paper markets. This is a chart of the NASDAQ Composite Index divided by the US M2 money supply. And you can see this is where we're at right now. This is where we were prior to the tariff announcement. And the only time valuations were really higher than they were up until the recent sell-off was back in the dot-com bubble. And we remain at a very elevated level here. So I think there's still a lot of room for a sell-off in these paper assets, especially if this trade war with China continues to escalate, because while the reciprocal tariffs on a lot of nations have been paused, the trade war with China continues to accelerate. And this is another measure measure of stock valuations. Now, this is as of Wednesday, yesterday, so this has come down a little bit with today's sell-off, but you can see this is the Shiller PE ratio. This is a PE ratio of the S&P 500 that is based on average inflation-adjusted earnings over the previous 10 years, so this kind of smooths out some of the data, smooths out some of the wrinkles. It's a good way to compare valuations of stocks over multiple decades. And you can see that even though, yeah, it has come down from the peak, we're still very high. The only time it's been higher was, again, in the dot-com bubble. In fact, the current Shiller PE ratio is higher than it was in 1929 before that major stock market crash. So there's still a lot of downside here potentially if conditions don't improve. And speaking of China, let's talk about that briefly, because this is getting very serious. Today, the White House confirmed that the total base tariff on China is now 145%. And that is certainly going to have an effect on inflation. It is going to have an effect on U.S. trade with the world's second largest economy. And this could absolutely have a very chilling effect on the global economy, and here in the domestic economy could potentially lead to a recession. Now, all of this could end, I guess, at any moment if China decides to capitulate to a Trump deal. You know, he likes to make these deals with countries. Or potentially if Trump realizes that he's in over his head, he's bit off more than he can chew here, and he has to walk back these tariffs and capitulate, although it's hard to imagine how he would do that and save face at the same time. But if he does, I'm sure that the administration will find some way to spin it. Of course, at any moment, a headline one way or the other could trigger a huge move here in these markets to the upside or the downside. And sometimes, people leave me comments when I make a statement like that and they say, well, which is it? If, and, or maybe. Well, that's just kind of where we're at, folks. And that's why what I'm doing is stacking physical assets, because the thing about stacking gold and silver is you can look at your stack. When a headline comes out, the number of ounces doesn't change. And that's why I like physical assets. That's why I think they're incredibly important in this environment. But let me know what you think. Leave me a comment down below. If you enjoyed this video, check out the one that's popping up on your screen now. Thanks for watching, everybody. Don't forget to like, comment, and subscribe. I'll catch you next time. Smart Silver Stacker out.